Gold did gain significant ground, but it must be acknowledged it was based almost entirely on dollar weakness. Hello traders, Gary Wagner here, 12:28 in Honolulu, 6:28 in New York on Friday. Happy Aloha Friday, as we say on the island. It is the 14th day of July, 2023, and this is the Weekend Review. Typically, the first commodity we look at is gold. I want to change that up a little bit today because the dollar has had such a dominant influence on the price of gold. For the first time in the last 7 trading days, we have seen the dollar index gain fractional value. Although it traded to a lower low, the candlestick was a small green candle, indicating that the dollar closed above its opening price as well as above yesterday's closing price. The dollar gained 0.17%, and the index is currently fixed at 99.63. To give you an idea of what kind of week we saw in the dollar and the magnitude in which it lost value, consider this. This weekly chart shows that the dollar opened just below 102 and closed below 100. Simple math conveys the fact that the dollar lost approximately 2% in value when compared to the basket of currencies contained in the dollar index. While the magnitude of the devaluation of the dollar is best conveyed on a weekly chart, the consistency of losses can be best conveyed on a daily chart. We can see that over the last 6 trading days, every candle has been red, meaning that it closed below its opening price. It also closed below the prior close. Only on a couple of occasions, this first candle and these 2 candles here actually had a small drop, with yesterday's being the most significant of the drop and almost equal to what we saw a few days prior as well as yesterday. Today, the dollar did make the lowest low. In fact, it is the lowest low since last year, right around the middle of March, this price point here. The question is, the dollar has sunk to the 61.8% fib retracement. Will it find technical support in this area or continue lower? Because if you recall, my target for the dollar's decline took it below 100, and we issued that approximately 1 month ago. Gold declined today, the first occasion in the last 5 trading days, giving up $4.50 or 0.23%, with the most active August contract currently fixed at $1,959.30. We are looking at a daily chart of gold. It has seen significant rises over the last 2 weeks, moving from a low of just about 1900 to these recent highs at around 1965. I believe that the first level of resistance matches these highs we've seen over the last couple of days at roughly 1964.65. It is based upon the 50-day moving average. I also believe that major support occurs at $1,980 to $1,983. That represents the 38.2 fib retracement. Silver continues to gain ground, today gaining 21 cents or 0.85%, taking the most active September silver contract to $25.16. The most exciting market has been silver, bar none. Silver has had a phenomenal move, specifically over the last couple of days. Today it broke above $25 per ounce. I believe that silver has a clear path to a minimum of $25.52. It is based on these series of tops that acted as resistance, as well as this top at $26.31. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you after the weekend for the next daily update and review. Bye-bye.